Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So we have a lot to cover today. We have some earnings out. We have some key economic news that we'll be looking at here, as well as a few other major movers, both in crypto as well as stocks and commodities. So as always, folks, I will go over all of it and make sure you walk out of here, out of this trading game plan, with key levels to potentially trade today and a better understanding of the charts. Remember, verified investing, no BS, just charts and data. All right, speaking of charts and data, let's get right into it. All right, so S&P futures, let's flip over to the S&P futures here and take a look. And what we see is the markets are just basically chopping around the flat line today. And you can see, again, these are the S&P futures, which shows us overnight we did have a little bit of a sell-off to the downside. And then this morning, buyers started to come in a little bit, then a few choppy moves up and down. If we look at where yesterday closed, we closed right here on the charts. So on the S&P futures, you can see we are down fractionally this morning. Now, we know that we've been into some key resistance on the charts. If we take a look at the S&P daily chart, this is the most important trend line that I am following at this point. It's a very crystal clear pivot low going back to October of 2023 through the major corrective move in August of 2024. We saw it continue to bounce off of this move until it broke with the Liberation Day sell-off and everything that followed, right? And then from that point on, we have rallied back to the underbelly of this trend line. And so far, that is a line that clearly needs to be respected. Now, it doesn't mean it can't be broken, as we know, but at least for now, it has proven itself. It has not been broken back to the upside. And therefore, I look at it and I respect it and understand that the markets are just underneath key resistance at this point. All right. So again, that is something that I'm definitely going to be keeping an eye on. Flipping over to the NASDAQ 100, same sort of deal, just a little bit different in that it's a parallel channel. Again, only going back to early 2025 from May. But you can see, again, we just hit the high end of the parallel on the QQQ around 583.35. And we've backed off a little bit, basically $9 on the QQQ from that high pivot. Now, the big question I have is, do we come all the way down to the low end of the parallel around 566, or do we break? Or maybe we go back up and test the highs, and we don't know yet. And again, as a technician, you have to be honest that you don't necessarily know. All we know is that the high end of the parallel is resistance, the low end is support, and in technical analysis, upsloping parallels, once you get to 4 hits, and this is really, really important, good educational information, 1, 2, 3. So the next hit would be 4. The 4th hit of an upsloping parallel channel has a 50% chance of breaking. If it bounces on the 4th, the 5th has a 60%, the 6th a 70%, and so on and so forth. In other words, the more you hit a trend line, in this case, the lower band of a parallel channel, the more likely you break to the downside. All right. And again, very, very important. I always talk to you guys about the analogy of trend lines. When you're hammering on a trend line, and generally you break down through upsloping trend lines and break out through downsloping or descending trend lines, the key is, just like a door that you want to bust through, we ram into that door as hard as we can. Chances are, unless you're really, really strong, you're not going to bust it down in one ram. But then if you do it again and again and again, it slowly wears the door down until that door finally breaks. Same thing works in charts. And that's such an important concept to understand when you're analyzing charts. So the first, second, third hit of a trend line, oftentimes that will be bounces off of that trend line. But once you get to 4th, it's about a 50-50, and then it slowly increases the odds of you breaking through that. All right, back to the charts we go. Let's take a look. The DXY, again, just interesting on the DXY. Now, I've shown you big views in the game plans here in My Trading Game Plans from, larger parallels here that go back amazingly to 2022. And we can see, again, how it's respected this larger parallel. But I've been just looking recently, just in the last day, at this little new parallel, classic underbelly trend line here that connects the lows going back to early July through late July through mid-August, and it connects beautifully to the recent highs. Now, why is this important? Well, when we look at pattern formation, what type of pattern formation would this signal? And what we know is when you're falling in a chart, much like the dollar has fallen here, and then you start to go like this, what type of pattern formation is that? That would be known as a bear flag, or in spirit of bear flag. And what that tells us is that while we don't know if we'll bounce inside of this parallel much more, the ultimate resolution based on probability will be for a break to the downside. All right. So again, we'll have to watch and see how that plays out, or when it does. But we have to remember what's coming up on Friday: Jackson Hole, the speech from Jerome Powell. And I do think that will be a market moving event. I think that one of the reasons why yesterday was such a quiet day and today could be setting up for another quiet day in the markets is because everyone is just looking towards Friday's speech from Jerome Powell. What are they going to do on interest rates? How are they going to behave? What type of things are going to be said from the Fed in terms of cutting rates? Speaking of rates, let's flip over to the 10-year yield. Now, remember, the Fed controls the short end of the curve, not the long end. But in general, they try to influence the long end by lowering rates, or whenever they do. Whether it will actually work to lower the 10-year yield, 20-year, and 30-year, that is left to be determined. But what type of pattern formation is this? We just went over it before when we were drawing on our charts. You have the most recent down move here, which broke a wedge pattern. And then you have this type of pattern. This is all inside bar. Notice again, big green candle. Every candle since then of consolidation, which is a slight inching up in bias, right? Slowly inching higher. That is all inside of the red candle. That is bearish per the chart. So the 10-year yield, if you had to put a probability on this, it broke down and now it's making a bearish inside bar flaggish pattern. You would put this as a lower probability. In other words, probability would favor a down move in the 10-year yield. Now, how low? All we can do is really go to our levels. First support should be around 4.12, and then potentially 3.85, which would be our low from April 7th. And again, keep in mind, this isn't like in a day or even on Friday. I don't expect us to go down here, but I do think that we could see selling. I would favor a sell-off in yields, if assuming we don't pull back in the next few days going into the speech by Jerome Powell. Based on the chart pattern, it would insinuate a down move. Now, what would be a driving force to get the 10-year yield down to 3.85? It wouldn't be rates generally by the Fed, because I don't think the Fed will cut that much due to how high PPI data was last week. But what it would tell us is the economy. If rates are going back to 3.85, it's telling us the economy is slowing, and that would bring in rates, no doubt about it. All right, some stocks in the motion movement action here. Let's take a look. All right, guys, we're going to start with Intel today. Intel is up about 4% on the back of a $2 billion investment from SoftBank. So again, SoftBank here, guys, is a big Japanese firm. They are investing $2 billion in Intel. And again, Intel has been one of the weakest performers in the chip sector. We even have heard that the administration is looking to potentially take a 10% stake in Intel as well. Now, if we flip back to the charts, are there any trading levels to look for today? Again, the stock isn't up massively, so that's part of the thought process, is when you want to trade stocks that are overreacting, right? I wouldn't call a 4% move on a big investment a overreaction. But if we did rally up, my first potential short level would be a gap fill here at around 25.90 or so. That would be first resistance. We're only at 24.80, so it would have to go up about $1.10 higher for it to get into a potential resistance level on Intel. All right, so keep an eye on that. Next up, we have Home Depot. Home Depot, folks, here we can clearly see Home Depot initially reported earnings this morning. The stock fell, but has slowly been grinding up. It is not up a lot, though. Keep in mind, this closed yesterday just below 395. It's trading at 403, or just below 403. for a percentage move that is very small. Now, one thing you can see here, again, as a retailer, it was up a little bit going into earnings, but it's not at the highs here. And it has pulled back just prior on the daily chart, coming back in. Shortable level, this would be super aggressive. I will not take it because it's too aggressive even for me. But your little pivot high here at around 408 will be resistance. I will be looking more so for the 417 level. Let me show you how I find that level here. See this high here and these highs right across, right around 417 to 418. We put a trend line there, and that would give me a good basis. So what we can see here is price on Home Depot. In fact, I'll zoom in on this here a little bit more. We kind of fell down, and then we started to move up and got rejected there. Moved up, rejected, moved up and rejected, and then it had its bigger move down. That tells me that there is resistance there. At least there's a good probability of where price may pull back. So again, I will keep an eye on that, but I would say that 417 to 418 would be the first level for me on Home Depot. Next up, Medtronic. Medtronic, a tech stock, seeing some downside on earnings. Again, not a massive move by any stretch. Closed yesterday right around $93. It's trading near $88 right now. If we go to the daily chart, again, you can see the little bit of a gap down. The stock has run up a little bit, wasn't at all-time highs, but really for me, again, same sort of deal here. There's a gap fill and zone right here. In fact, I'm going to make it into a zone. Sometimes I give you zones, but the gap fill zone would be the first area here, and then it would go down to the lows of that area right here. So this is about a 50-cent range on Medtronic. You can see all these lows here, how it held, and then there's also a gap fill right here at 86. So $86 to $85.50. If it were to dump into that, there might be a day tradable support level. That will be one that I am looking for on the charts. And I always like to zoom out on the chart just to see, just in case it were to really dump out more. There's an upsloping trend line around 82.60 right here, connecting the lows from October 2023 through basically May 2025. And again, that's around 82.60 on the chart. But first level for me to day trade today will be definitely right in this range here. All right, couple other stocks that I want to bring to your attention. Take a look at Palantir. Palantir continues to roll over. Now, listen, it was overbought. There's no doubt about it. So it was due for a pullback. One of the interesting things I'm seeing is that Palantir is starting to roll over and now down 4 days in a row, potentially 5 today. But Robinhood, which is also in that same, listen, I mean, they're totally different companies in terms of what they do, but retail investors have been drawn to these because these have been the hottest names. So it's interesting to see Robinhood holding up so well while Palantir rolls over. Now, in terms of a level, like where could Palantir start to get a bounce here? I'm using this trend line. We can clearly see that this connects all the highs going back to March of 2025. So that gave us our top. And then we drag this down right into this level here. Okay, so see how on Palantir, we have a low here and right through here. And then kind of you had this one gap down, which was the April 7th low, but prior and after it hit it each time. Look at that. Pretty cool. All right, so that tells me that's your trend line to watch. And if we zoom out on this chart on Palantir, that gives me a downside target of around $162. Now, interestingly enough, look at what coexists at $162. There's a flat top right here that is also a gap fill. And so that's at right around 161. So 162 to 161 would be your downside near-term target. Now, I want to be clear. I still think Palantir, even at that level, is extremely overbought. But listen, strong stocks, when they pull back, they will get bounces, right? Because they're strong. And so buy the dippers are going to say, oh, this is a great technical level. This is a pullback from, almost $190 down to 162 or 161. Let's buy it and look for a bounce. And you probably will get a bounce. Now, again, if you're going to trade that, I would say you hold it for a day or two, or you just day trade it, whatever you want to do. I wouldn't be married to it at that level because I ultimately think it will go lower. But I like that level. I think that's at least where this is heading in the near term over the next week or so on Palantir. And then Robinhood real quick here, guys. Robinhood, we can see it's trading higher this morning at $115.85. But this is what I'm keeping an eye on. Long-term trend line on Robinhood, excuse me, going back to August of 2024. right? That was that big dip we just talked about on that. That's one of the key dips that the S&P lows is used for the trend line through the high of 2025 in February before the big correction. And then look at how it's respected this line each time. And so resistance on this, I would say $118 to $119. And then ultimately, if you're looking for where this stock starts to really crater, maybe follows Palantir down, watch this trend line here going back to April, the April lows. It connects through all these lows along here. Once that breaks, that would be a wedge pattern break, and you should expect a bigger correction in Palantir, okay? Or excuse me, in Robinhood. So Robinhood, this level is approximately at $110. If it gets below 110 and closes with confirmation, start looking for a bigger correction. As long as it holds 110, this can be viewed as a strong stock that, granted, upside is limited with this trend line, but it could stay within this range and just continue to grind higher over time. One last chart on stocks before I flip over to crypto is JP Morgan. JP Morgan fascinates me. So number one, there's a couple things that I'm keeping an eye on here. They are all bearish. Down move, inside bar. What type of pattern is that? That's a bear flag, right? So we have a bear flag. Then we have this little parallel that marked the top with a parallel trend line just here, which is actually, look at this. This is actually a head and shoulders pattern as well on the chart, right? So again, you got this little mini head and shoulder pattern here, which again, it hasn't broken the neckline, but if it does break, you get another move down. So again, multiple bearish signals on JP Morgan's chart here. It hasn't broken yet. I want to be clear on that. And so again, really until it breaks, it's fine. It could do whatever it wants. But if it breaks the neckline at around 287, look for this to correct down to 268 on the chart. Good support at 268, but I do think it has a corrective move there. So yeah, very interesting stuff, guys. Again, very, very fascinating to see kind of what's going on here in the world of charting. And I always try to bring that A game so you guys know that it's not a matter of what I think or I feel. It's really what are the charts telling us here at Verified Investing. And that's, again, everything, right? That's what it comes down to. All right, let's get into crypto. Let's take a look. All right, let's flip into the Bitcoin chart. We always start with Bitcoin. This was a big deal yesterday. We talked about a major upsloping trend line on Bitcoin that starts back at that April low, connects through the lows of June, and then hit again in August here before breaking now in late August. And this did close below the trend line. Now, listen, could my trend line be off a fraction? There's always a chance of that. But this is a pretty obvious break, right? I mean, you know, the trend line is going as low as it can right here. And that is a close below. Now, remember, folks, if something closes below a trend line or above, is it a breakout or breakdown? Or does it need confirmation to know that it's not a fake out by institutions? And I always say, look for confirmation to be sure. I'd rather be sure and miss a little bit of action versus not know and get whipped out of a trade and take a loss, right? Much better to do that in my humble opinion. So today's candle as of now would not confirm the breakdown. It would have to close again below basically 114,600. If it did close below there today, okay, now it's a confirmed breakdown. But listen, is it good that it's violating this line? No, that's not good. But again, you wouldn't say this is a confirmed breakdown yet. There's always a chance, a decent chance at this point that they can rescue it and bring it back up. If it confirms, you're likely headed to 112,000. And then really, I would even say lower, maybe 100,000 could be in the cards. But let's continue to follow this. And then on the upside, let's say it does get rescued. It needs to break and confirm above this double top at around 123,400. Let's look at ETH real quick here, guys. See what ETH is doing. It continues to kind of come back in. Again, ETH missed its all-time high double top by a fraction. Generally, in technical analysis, that's pretty rare. It usually tells you there will be one more move to the upside that will come in. Now, where would that move come in? To me, at this 4,000 level, 4,060 area, if it comes here and can hold, we should get a springboard that then pierces this 4,800. And I even think it could pierce the 5,000 level. Now, again, do I think it goes higher from there? Honestly, I have no idea. I'm just going to be honest with you guys. I'd have to reevaluate the chart at that point. I'd also want to pay attention to what the stock market is doing, the different factors in that. All right. So again, I'll cover that just that crypto today. Tomorrow we'll look at Solana in addition to Bitcoin. And later today on my channel, I'll even try to do an XRP video for those of you guys that want to see more in-depth analysis on, again, that's on my personal channel versus verified investing. All right, so now let's get into. All right, guys. So the first thing we have to look at, as always, is gold, right? Gold obviously is the kingmaker here of the commodity complex, at least right now. And gold continues to languish. Now, you guys know I've been near-term bearish on this ever since we broke this uptrend right here, right? Long uptrend trend line. And again, remember, I'm not reinventing a wheel here. Like literally, I'm just connecting the lows. And then I'm saying, okay, it closed below that trend line and it confirms, then it comes down. It gets a bounce beautifully off this area right here at 32.70. And as long as it stays below that same trend line, then it's a retrace to the scene of the crime and you got to respect it. Just like we've talked about on the S&P chart and all these other charts. And so again, no complex equations, no calculus, no nothing. It's literally just looking at the charts and letting the charts tell me what the high probability setup is. And right now, we still are below this area here. And so you got to favor a down move to at least 32.70 on gold. And then we want to watch and see if it breaks. If it breaks and confirms, then I do think you're headed at least down to 3,100, maybe even close to $3,000. Now, what I always like to tell people is, look at this. If we take away all those other lines, what type of pattern is this? Okay, let me put this line in. What type of pattern is this? It's a bull flag, right? So this is where, as a trader or an investor, you need to be able to differentiate between near term and mid to long term. And so while my bias is near term negative, it can go all the way down to about 3,000, and my mid to long term bias is still very, very bullish to the upside. Because again, the flag pattern would still be fine down here. It's a classic parallel channel. It should be expected to bounce, and the pattern is bullish. And so these are things that, again, whether you're trading Bitcoin or stocks or the S&P or whatever, even Forex, these are things you have to look at. You have to look at, okay, what's the near term versus mid to long term? And in near term means, okay, I can trade this over the next couple weeks, let's say, or next couple days. Long term says, okay, if I'm a long-term investor, do I want to be long gold or short gold? Well, obviously long gold, right? I mean, as long as the printing presses in our government and governments around the world are running and the debt to GDP numbers are going up, I mean, it's kind of a no-brainer that you want to be long some of these other asset classes that are denominated in terms of dollars. As the dollar weakens, those other assets should go higher. All right, let's get back to other commodities here, guys. Wow, I'm running a little long today. I apologize for that. I do have to get to my trading room as well. So here we have silver. Still nothing going on silver. All right, it's resistance up here, support down here at 34.65, resistance again 39.75 or so. Nothing new on that chart. And if we take a look at oil is creeping lower again. I still have my downside target at $60.65. And by the way, that doesn't mean it can't go lower. That's just where you'll start hitting some technical support, and the odds of a bounce would increase right there. Okay. Eventually, by the way, I think gold's going lower. Oil's going lower because I do think that the U.S. economy is in the process of slowing. Lastly, natural gas. Notice again, broke, never confirmed though, but it still held the resistance line, and nat gas is coming lower. Remember, 263 is my downside first area of support that matches these two low pivots over here. All right, guys, listen, I have to get going. Of course, I like to do my final thoughts. All in all, folks, some good opportunities here, both swing trading and day trading. Keep an eye out for more earnings. We are going to have some more earnings at Walmart later this week, but really Jerome Powell on Friday is going to be the big one. As always, folks, I am here for you to do my best to teach you and kind of give you all the knowledge that is up here from 26 years of trading experience. And again, that's what these game plans are all about. It's not personal preference. It's not my gut. It's not my heart. It's what are the charts saying? What's the data saying? Therefore, a probability can be assigned to a trade. And I want to take basically 75% win rates or better, and the rest takes care of itself. You guys go have a great rest of your day. Thank you so much for tuning in. Take care.